Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories at 1:30 p.m. Stocks seesaw after a week open. Midcaps trade flat. Oil and gas, metals eke out gains, while consumer durables and IT drift lower.
Midcap hits a fresh 52-week high after its Romanian arm bags a repeat contract worth 260 crore rupees, gains nearly 11% intraday.
Glenmark Pharmaceutical slides as details of the US FDA's warning letter to the company suggest several lapses at its Goa plant and violation of manufacturing norms.
Jay Prakash Associates surges ahead of a board meet today to assess progress made on its divestment initiatives and a buzz of deal brewing between JP Group and Dalmia Bharat.
LTI Mindtree slips after cautious management commentary. The management tells MK Global that higher than usual furloughs, lower number of on-site working days and elimination of third-party revenue will likely weigh on revenue growth in the third quarter of FY23.
All right, those are the top headlines that we are tracking for you on Midcap Radar. As far as the markets are concerned, it has fallen sharply from the highs. So it's a 50-point cut that we're seeing on the Nifty. And the SGX Nifty today was indicating a cut of around 90 points. So it's not as bad. And we did see the recovery in the opening trade as well. But it has fallen yet again. The Sensex down 200 points. And the Midcap Index and the Bank Nifty, which were actually outperforming and were in the green, they also have fallen from the highs. So we are seeing a cut of 27 points when it comes to Midcap Index. And Bank Nifty is down 17 points. So it remains to be seen whether we'll continue this way of movement in the markets or not. But Reema, we do have the CPI number later today. We will have the outcome from the Fed meet as well. So big cues which are lined up.
Indeed, so markets are in a wait-and-watch approach, and the two macro indicators that you spoke about, October IIP and the November CPI, they will be out at 5:30 p.m. But of course, the RBI policy just got done last week. So in that sense, markets will have some more time before and more news flow to digest on the economy front before the next policy made. But let's get to our segment, Midcap Movers. Vivek is here to take us through the midcaps that are moving around in trade. Vivek?
Well, good afternoon. Quite a few stocks on the radar. They continue to hit fresh 52-week highs. Also, quite a few volume buzzers on our radar today. First on our list, Godfrey Phillips. This stock continues to surge higher in every consecutive trading session today, again at a fresh 52-week high. Another stock that we are tracking is Gravita. This particular stock in the last 8 to 10 trading session has gained close to 30%. Another stock that we're looking at a 52-week high today is VIP Clothing. The news of a preferential allotment and the participation of some marquee investors is keeping this particular stock active. We also have Reddington and two stocks, on the back of some strong order wins coming in, both PSP Project and VA Tech Wabag. Both of them are gaining in today's trading session. Some of the stocks that we are tracking on the back of very strong volumes that we're trading today, close to multiple times the typical 5-day or 10-day average. Ion Exchange today. In fact, after a brief profit booking that we saw in the last couple of trading sessions, this stock is once again moving higher. Ahluwalia Contracts, Themis Medicare, as well as Jindal Stainless, all of these stocks today are moving up on strong volumes. On the other hand, today, especially in the healthcare space, we're seeing quite a bit of sell-off. Global Health, Medanta, Spark, as well as Metropolis Health, all of them are moving lower in the session. Godrej Consumer, after a sharp downtick on the back of the CNBC confirmation or clarification coming in that the MD&C is not stepping down, this particular stock, after a sharp downtick, has recovered in today's trading session.
Okay, all right. Vivek, thank you so much for all those stocks in focus. Let's welcome Himanshu Gupta of Globe Capital for a technical check on the markets. Himanshu, good afternoon. Thanks a lot for joining us. Well, what are the charts suggesting? We've seen a sharp fall from the highs.
Very good afternoon to you. Well, I think before that kind of profit booking seen in the last 30 minutes or so, we have also seen an equally smart amount of buying in the opening trade today after the initial open. And I think the markets have actually retested the important support zone of 18,350 odd levels. And my sense is that for now, the markets have actually formed a near-term base around 18,350, 18,300 odd levels. So I'll be a buyer here after and a dip towards 18,400 should be utilized to go long with a stop loss below 18,350. On the upside, ahead of the event, as you just mentioned, not only from an Indian perspective, but from a global perspective, maybe the markets would like to spend a while before these events pass on within this band of 18,400 to 18,600. But clearly, the way the charts are placed, I think one should be buying the dips close to 18,400. Coming to Nifty Bank, clear outperformer, and today the breakout has been led by the leader, the HDFC Bank. There also, again, I think 14,300, 43,300, 43,700 should be the range for the immediate near term. And again, as long as 43,300 is being held here, I think every dip should be utilized to go long in Nifty Bank as well.
Okay, use the dips to go long. What about individual stocks?
So on individual stocks, first is a buy on the heavyweight HDFC Bank. Very strong breakout given in today's session. I think the stock is heading towards 1700 sooner rather than later. One can initiate long around current levels, keep a stop loss below 1620, and hold it for a targets of 1680 to 1700 for a very near term. And one trading bet on the short side, I think BEL, Bharat Electronics, that's one stock that's actually showing some signs of topping out. And the stock is on the verge of a breakdown. So one can initiate short only from a trading perspective in this counter. Can short BEL futures around current levels of 105. Keep a stop loss above 107. And on the short side, targets close to 198 can be seen in the immediate near term.
Okay, all right, Himanshu, thank you so much for joining us and taking us through your technical picks. With that, we'll slip into a break now. On the other side, we'll be joined by Rajan Sethuraman, who's the CEO of Latent View Analytics, to discuss their business outlook. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. As promised, let's get in the management of Latent View Analytics. The IT companies, they continue to be in focus. So we have with us Mr. Rajan Sethuraman, who's the CEO of the company, joining us now for a quick business outlook. Mr. Sethuraman, good afternoon. Thanks a lot for joining us. Well, there's been so much talk about a possibility of a slowdown. We are speaking to other IT companies as well. What is it specifically for you? Is Latent View seeing any signs of slowdown?
So we are seeing some talk about budget cutbacks in the technology and in the automotive space, anything in the tune of 10 to 15, 20%. But these are overall budget cutbacks that those organizations are considering or thinking about. What we still don't have a full handle on is how much of this will flow through to analytics initiatives, and specifically what might be the impact of the work that we are doing. Also, in the past, as I mentioned, when the resources are in a constrained scenario, that's when organizations also look at using the power of analytics to figure out what to do and what not to do. So we would want to wait and see how this unfolds right in the coming months.
So these clients, these enterprises who are talking about these 10 to 20% budget cuts that you referred to, these aren't your clients? Have any of your clients indicated that 2023, they may look to cut back, tighten the belt on tech spending?
Yeah, I'm talking about clients that we are working with us.
All right. How many clients, sir, then?
So we have heard this in 2-3 accounts at this point in time. So it's not a whole lot. I mean, we're working with about 50 accounts. So out of that, about 4 of the accounts, we have heard some conversations around possibilities of budget cutbacks. But as I said, it's early days, right, in terms of how it will transpire in those accounts. And also, whether there'll be any ripple or effects in other accounts that you're working with.
Okay. So this is about what is happening at the industry level and particularly for your company as well. Post Q2, you had indicated that, yes, there are about 10 of the companies in early stages of discussions and analysis for an acquisition. Has anything been finalized in this regard? And right now, are the valuations attractive in the current scenario that we are in?
We haven't finalized anything. The valuation expectations are being tempered in light of the current scenario. And some of the conversations have progressed a little further in the last month and a half. But we are not near to closure on any of them. And I'm expecting that we might get closer to a real action in the next quarter or so, quarter, 2 quarters. We are also being cautious given the external environment, right, in terms of what the real synergy benefits would be given the current situation. So conversations are on and we are progressing, but we are not anywhere near closure at this point in time.
So post Q2, you said that you were doing a due diligence of about 10 companies. Now, have you at least whittled out some of them? How many companies are you actively looking at? And should we expect you to close this acquisition in the first half of next calendar year?
So, yeah, we have whittled down. So some of them have been filtered out, but there are others who have been added into the evaluation pool. There are two or three which are a little bit more interesting, right, in terms of the number of conversations that we have had. Yeah, first half of next year looks like a likely scenario at this time. But as I said earlier, we don't want to rush in and do something that doesn't make sense to us. So we will go through the due diligence process on the ones that meet our initial criteria, and then we'll fructify them, right, based on how all the factors considered, right, turn out in our evaluation.
We do take your point there, and we'll not be asking you the amount or a specific name, but just more details. Since your the maximum revenues coming from US, you were increasing efforts in Europe plus India. Will it be somewhere in those geographies then?
Yeah, definitely the acquisition opportunities we are considering have either a strong market presence or a strong base, right, in one of these three geographies, the US, Europe, as well as India. Now, India being a fairly important aspect, right, from a supply perspective. So definitely the focus will be on those markets. Opportunities that will help us leapfrog in Europe will be particularly attractive. So there are a few like that as well on the table that we are considering at this time.
So getting back to that point about slowdown, a potential budget cut is going to impact your revenues only in FY24. Can you talk about the near term? What's happening right now? Are we seeing higher furloughs? And therefore, what will the second half of the year look like? And in which areas are we seeing higher furloughs?
So we have heard of, there is one account that we've been working with in the past where furloughs were anyway the order of the day in the our third quarter. So that's not a surprise because that is something that they were doing even prior to the pandemic. There is one account in the automotive space where we are hearing talks of a furlough, right? There is a possibility, but they're also talking about how some of that can be pulled back in the first quarter or second quarter of the next year. So beyond that, we haven't heard any particular requests for furloughs this time out of the client base that we are currently working with. We will have to see whether there are any particular requests that come, right, in terms of maybe slowing down a few initiatives and then ramping up, right, as the year progresses. I'm expecting that some of the uncertainty that's there in the minds of the clients will also start getting resolved, right, by first quarter, and at which point in time we are kind of starting to look at FY24. So more clarity will emerge in the February-March timeframe.
So as of now, there is nothing which is going to slow down your revenue, right? There are only talks. There has been no concrete action. There is no deal cancellation, no deal deferral, nothing.
Nothing at this time. I mean,
so what is the all right? What's the second half of the year growth looking like?
So I think we will. We did about 33% last year. It's going to be lower than that given the economic trajectory at this time and the time frame for some of the conversations that we are currently having. There are two reasons. One is the conversations are larger, so more stakeholders are involved. So some of these things will take a little longer to fructify. Secondly, we are.
Okay, that line has frozen, but interesting takeaways coming in from latent view analytics. And now increasingly in the conversations, at least, you are hearing caution seeping in from the management commentary. You know, when we spoke to all these companies post their Q2 numbers, so which was basically in October because IT companies usually report their numbers first up, they're saying, you know, the clients are seeing the headlines. They're also reading there is a potential of recession. But as of now, there is no talk. But this is the first time now a lot of companies are one after the other talking about that, you know, there are conversations about a potential budget cuts. You are seeing some sort of a deal cancellation, not cancellation, but at least a slowdown in decision making, etc. Some companies taking higher furloughs than what they typically do. So it does appear the lay of the land has changed a bit in the last, 1 month compared to what it was, say, in October. So that's latent view analytics telling us that there is one client in the automotive space who is considering higher furloughs in Q3 in the month of December, but there is a possibility that even if they do furloughs in Q3, that work may be pushed to Q2. And he said 4 out of their 50 clients. So we're talking about a good high single-digit kind of contribution, perhaps to, I can't say in contribution in terms of revenues, but 4 out of their 50 clients are talking about the possibility of a 10 to 20% budget cut. So let's see how this plays out. Get into a break. We'll come back with our special segment, Midcap Spotlight. Welcome back. Let's get to our favorite segment, Midcap Spotlight. Abhishek is going to be talking about Fusion Microfinance. Some bullish commentary coming in from Haitong Securities. Abhishek?
Well, Rima, as you mentioned, Haitong Securities has released a note on Fusion MFI, wherein they have initiated coverage with an outperformance rating and a target price of 578 per share. They say that the disbursal ticket size has grown at a mere 11% CAGR, despite the strong loan growth that Fusion Microfinance has seen. So, companies well diversified with presence, across regions, no state or district, respectively, have about 20% or 3% of the AUM. So it is well diversified over there. And over FY23 to 25, they expect AUM CAGR of about 29%. The net interest margin to remain stable around 11.8%, driven by the fact that NII growth is expected at around 36% on a CAGR basis between the same period. So superior return ratios is what they forecast for Fusion Microfinance, with ROA of about 4.6% and ROE of about 23.1% for FY25. So valuation, they say that the price to book value, adjusted book value, is just 1.5 times FY24, which is attractive for investors. So trades at a discount of 34% to the next peer, that is Cradac. Back to you.
All right, Abhishek, thank you so much for joining us. That's on Fusion Microfinance. The stock is up 4% in trade. But that's not it. A lot of stocks from the infrastructure space are buzzing in trade today. We had Equabag, RVNL, PSP projects. Vivek is joining us with all those details. Vivek.
Well, good afternoon. Absolutely right. Quite a few stocks on the back of order wins and some developments are buzzing in today's trading session. So first on our list is, as you mentioned, Viatech Wabag. Now, the company has got an interesting order win. This is an industrial waste treatment order in Romania, and the size of this particular order is almost 260 crore. On the back of that, the stock is clearly buzzing in today's trading session. The other one is PSP Projects. Two order wins coming in for this particular name. The first one is for a civil construction project in Gujarat worth almost a little over 120 crore. And the other one that just came on the exchanges is a work order of a little over 115 crore. And this is for the institutional and industrial category. So far in FY23, the order inflow as far as PSP projects is a little over 1940 crore rupees. Last on our list is RVNL. An interesting update coming in there as far as RVNL is concerned. The company has gone ahead and formed a JV company in 50-50 partnership with the Kyrgyzstan industry. And on the back of increased visibility as far as the export market is concerned, this particular stock too is in focus in the session.
Thank you very much for that. With that, we're out of time on Midcap Radar. Inside Out when we return.